Ever wondered what a stock looks like when it's on life support? Well, today we're scrubbing in. We've got our hands on a technical analysis report for a stock that's in a deep, deep crisis, and we're going to treat it just like a medical chart to figure out the diagnosis. Okay, let's get into it.
First things first, let's check the patient's pulse. As of November 12, 2025, the report puts YDKG's stock price at just 2.6 cents. In our medical analogy, that's an incredibly faint heartbeat, barely there.
And to really understand how bad that is, get this. That tiny little price represents a 99.3% drop from its 52-week high. Wow, this isn't just a cough or a cold. This is a full-blown, code-red emergency.
So the huge question is, how on earth does a stock even get to this point? And more importantly, what are its chances of recovery? Well, this new technical report gives us the diagnosis, and we are going to walk through it piece by piece.
So our first section here is all about understanding the initial trauma. Think of it like this. The stock has just been wheeled into the emergency room, and we're getting the first report from the paramedics on the scene.
This timeline really shows you just how fast the collapse happened. I mean, back in September, this thing was healthy, trading above $3 a share. By early November, it was fighting for its life, trying to hold on around 5 cents. And then, look at this. On November 11th, you see this massive capitulation volume. We're talking 135 million shares traded. That's basically the sound of everyone hitting the panic button at once, right before the price flatlined to where we are today.
Okay, so after that initial trauma, what's the big picture? Let's see what the doctors, the analysts, said after their first look. What's the overall diagnosis?
And here it is. They gave it a technical score of roughly 22%. In the world of stock analysis, that is a deeply, deeply troubling number. It's a very clear, very concise summary of an extremely grim outlook.
So what does a score like that actually mean? Well, the official diagnosis is strongly bearish. And let me tell you, that's not just a little bit of bad news. It basically means that every single technical signpost, every indicator they looked at, is pointing in the exact same direction, down. And not just down a little, but a severe, continued downtrend.
All right, now we get to the really interesting part. We're going to go deeper than just the top-line diagnosis and look at the specific tests, the actual vital signs that the report analyzed to come to this conclusion.
And this is where it gets absolutely wild. Just look at the sheer contrast here. On one side, you have the patient's immediate pulse. It's weak, it's fading at 2.6 cents. But on the other, you have where its long-term health should be. Its 200-day average price, its normal baseline, is $1.34. The gap between where it is and where it was is just staggering.
And this is where something called moving averages come into play. Now, the easiest way to think about these is just like a checkup on the patient's health over different periods. 5 days, 50 days, 200 days. And the report is crystal clear. YDKG is trading far, far below all of its key moving averages. So the takeaway is, it doesn't matter if you're looking at its short-term health or its long-term health. The diagnosis is exactly the same. It's a catastrophic downtrend.
The next vital sign they checked is the RSI, the Relative Strength Index. It's clocking in at a very, very low 18.34. In our medical analogy, this is basically a measure of the patient's energy or momentum, and right now it is showing profound, absolute exhaustion.
See, an RSI below 20 tells you that a stock is in what's called an oversold condition. The selling pressure has just been so intense for so long that it's completely worn out. But here's where things get a little complex. Even though this is overwhelmingly negative, sometimes, when a patient is this exhausted, they can have a small, reflexive bounce. Traders have a pretty grim name for it. They call it a dead cat bounce.
This deep exhaustion brings us to the really scary part, the systemic risks. If the patient is this unstable, what's the risk of complete organ failure? What could actually make this situation fatal for the stock?
And one of the most alarming symptoms is just extreme volatility. The report flags a metric called NOTR at over 46%, which is just incredibly high. This isn't just a weak pulse anymore, it's a wildly erratic one. It's a sign that the whole system is in chaos.
And that instability leads straight to this diagnosis. The report warns of 3 critical risks, and each one is more severe than the last. First, the risk of even more sharp drops in price. Second, the very real possibility that the exchange itself steps in to halt trading, like putting the patient in an induced coma. And third, the ultimate risk, getting delisted from the NASDAQ entirely. That's essentially game over.
So given everything we've just seen, what's the prognosis? Well, the report lays out two starkly different paths forward, just like a doctor might discuss the best case and worst case scenarios for a patient.
On one hand, you've got the bullish scenario. Let's call it the faint hope path. If the price can somehow claw its way above a key resistance level at 3.8 cents, it could trigger that small rebound we talked about. But on the other hand, we have the bearish scenario, and frankly, the one the report suggests is more likely. If the price breaks below its critical support level of 2.5 cents, the report says that would almost certainly trigger new lows, and maybe one of those catastrophic events like a trading halt.
And all of this leads us to the final section, the doctor's orders. Based on this entire examination, what is the final advice from the analysts who put this report together?
And they do not mince words. The recommendation is, and I'm quoting here, extremely high risk, avoid unless speculative long on rebound with less than 1% position, stop loss at 2.5 cents. It's about as stark a warning as you're ever going to get.
So it's absolutely crucial to remember this. Everything we've just gone over is based on technical analysis. It is the study of the chart, the price, the volume. It's like reading an EKG. It says nothing at all about the underlying company, not its products, not its management, not its financial health. This is purely a diagnosis of the stock's behavior in the market.
Which leaves us with this final, massive question. After looking at all the vital signs, the diagnosis and the prognosis, is this stock's condition truly terminal? Or does this extreme, critical state actually represent a 1 in a million opportunity for some daring speculator willing to bet on the faintest chance of recovery? The chart has given its diagnosis. The rest is up to the market.